Good morning to all traders. I'm happy to be back once again for our daily marketing science video, which is provided, of course, to you by Orbex. Name is Stavros, and today we're going to see what's happening with euro-dollar as well as dollar-yen. Euro is heading down again following the European elections. Perhaps a disappointment amid increased support in nationalist parties, and of course, loss of power on the populist parties, for example, German Angela Merkel's party, as well as Macron's in France. Now, in Greece as well, Tsipras called for an election already, and in the UK, we could be heading towards one there as well, a general election. Now, pound, of course, is also falling after the surprising week of win of Nigel Farage, and dollar found the opportunity, despite the bank holiday yesterday, to move higher. Now, of course, that didn't go so well against the yen, as fears amid Trump's trade deal with China increased demand for the safe havens. Let's have a quick look on the calendar today, what we expect on the macro side of things. In a few minutes, the Swiss GDP, which probably you're going to miss, some German data, consumer climate, and then, of course, we have consumer confidence in Europe as well as consumer confidence in the US. So not many events on the calendar, but I personally believe we are going to see markets moving after following the bank holiday yesterday, and volatility is likely to increase. Okay, so let's jump straight to the charts. I want to start with euro-dollar 4 hours. So we have been looking at this major upside move like weeks back, okay? So this is the first move to the upside. That would be wave 2, and from here we're looking for bulls to step in. The question is this the end of this ABC corrective wave? We're looking at the double. We're looking at the first impulse to the downside. We had the A correction, big correction in the on the shorter time frame, and then we're looking for correction. See, we are seeing some bullish signals already on the RSI and MACD, but now what remains to be seen is whether these move to the downside, this double bottom down here, is what will trigger the break outside this ending diagonal. Okay, I wouldn't be surprised if that was the case, but at the moment I'm seeing euro-dollar a little bit bearish. So let's go down on the the 1 hour chart to see what's happening here. So we talked about this zigzag last week, if I'm not mistaken, as well. Okay, so we're also on a triangle pattern, and we are waiting for the wave E to be completed pretty much. So I personally expect the euro-dollar to move a little bit higher, where it will meet this trend line and even lower in order for bulls to start stepping in. They need to push prices lower anyway. The cheaper the prices, the better for entries. Now on the RSI and the MACD, we have some bearish signals as well. So from this first zigzag, okay, we'll be looking here now. Of course, if prices just stop here in reverse, we're looking for this to be a flat. If not, we are going to see this being more likely a zigzag, and we're looking at, at least 110. Okay. Most likely, though, as you can see here, we'll have a correction over here up to the upside, and we're probably looking for another impulse to the downside. This impulse could take prices 1010, first target, 1095, second target, and third target will be the extension, 161 extension of this, which, if I'm not mistaken, is around 108. Invalidation point, of course, is the 50 Fibonacci retracement of this wave. Okay, if prices move above, then obviously we have a mixed view. Anything a break above here could be the sign we were expecting to see for bulls to start stepping in. But in the short term, I'm leaning towards the bear side rather than the bull side. But yet again, invalidation point 112 or even a little bit higher. Now on the dollar yen 4 hour again, we'll have a similar pattern, to be honest. I mean, on the longer time frame, because we're looking at the impulse to the upside and then the correction, ABC down here. We're looking at A has been completed, B has been completed. Now we're looking at the move to the downside, which looks pretty good, to be honest. And we also have on the other side the MACD 2 signs that prices are going to move lower. Now from here we have, one second, let me just get the pen again. Here we have moved an impulse to the downside. Okay, this is the fifth wave, ABC, and now we're looking to complete wave number 3. Of course, then number 4 wave will follow, and then the last wave to the downside. So we're looking at prices moving quite low. If that happens, of course, invalidation point again is 110.70, around 110.70. If we see a break below that level, obviously, we can expect for a retest and prices to move lower or a sharp breakout. But normally, don't forget, when we get a sharp decline over here, and the second one normally follows, comes in a sort of a consolidating pattern. So we could see something like this, and then prices break a little bit above and then move lower. In the shorter term, on the 1 hour chart, we talked about this pattern as well. I think it was last week, if I'm not mistaken, again. So we have 1, 2, 3, 4, 5. The end here, ABC. This ABC corrective wave came as a double zigzag. Okay, and from here, the prices started moving lower. Retraced there first, but then fell lower. Steep decline. Okay, so then correction. Sidelines move. And from here, most likely, we're going to move lower once again. Now, we have broke below this previous 78.6 retracement. That was a false break. Prices moved higher, but we didn't break above the previous highs. So in the shorter term, invalidation point would be 109.65 or 70. Okay, then we could probably look into go into consolidation and then receive further signs whether this is going to break or price will move lower. But in the longer term, that would be the invalidation for wave 2. If that level fails to be broken, then we're looking at going down for another impulse, wave 3, which is normally the largest one of all. So we're looking at this being more than 300 pips on the dollar yen. So this is all for the day. As I said before, I expect volatility to increase a little bit because yesterday was a bank holiday, so we expect moves to be a little bit more momentous, I would say. So I want to thank you for being with us for another day. If you like our video, hit the like button, also share with a friend. I would recommend that you keep an eye on our blog. It's where we cover the latest news, publish trading ideas, and provide all the necessary tools a trader needs.